Hey everybody, welcome back to our last webcast of the week. My name is Mike Fairborn and great to have you here from Markets and Sectors. Folks, we have seen a turbulent week in the markets, but there have been some good rebounds today in the market. We'll take a look at those. We'll look at, like we said in this class, market sectors. We'll drill down into some individual stocks as well to see what might be also interesting, maybe some of those bounces later that are happening later this week, possibly that could extend into next week. So we'll definitely do a dive into that amongst a whole other group basket, as you know, of many indicators. Folks, if you are here for the first time, let us know in the chat. But it is great to be here with you as we go through this. And just wanted to welcome you all on board. Folks, you can follow Cameron and I on X, Cameron May CS, Mike Fairborn CS. Would love to have you on board on the X platform if you'd like to. We do cover a number of different stocks, different charting scenarios, financial information as well. We'll discuss on there. But yep, happy Friday to all of you. Says Life in the Fast Lane. I'll say that as well, and welcome. Yep, Scott, it was a rough week. There's no doubt about it. But with that, let's take a look and see what areas might be interesting, what ones also might consider to still be week, possibly going forward. So with that, though, let's hit some disclosures right now. Information provided here is for general information purposes only. Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application is for educational purposes only. Investing involves risk, including for some products more than your initial investment. A look at some of the futures disclosures there. I wanted to state that futures and futures options trading involves substantial risk. It's not suitable for all investors, but we just look at the stocks in this class, or excuse me, we just look at the charts of those futures contracts in this class. And lastly, past performance is no guarantee of future results. So turning over the big screen here, looking at the S&P 500, as you can see right here, there is the bounce back. And you can see, I talked about this in our swing trade class last week, or I should say, I'm sorry, on Tuesday. If I were to draw a little line, just extending off of our S&P 500 here, you'll see off to the right, that lower, there we go, that lower price channel. There are the drawing tools. We touched right off the top. Those are really interesting levels to keep an eye on when you're looking at the S&P 500. So let's look at this. Let's see how posture is right now for the markets. I like to start off with posture, seeing where we are, kind of big term, big picture, and then we'll come back in and look and see how this is unfolding before we dive into some sector analysis as well. So just real quick, let's pull up our market posture. I'd like to start off with that, and we'll start off first with the daily chart. You can see up top we have the 100, we've got the 200-day moving averages. We've actually also got the 50 in here amongst a number of different moving averages, and you'll see here on our S&P 500, where are we at right now? Well, we are right at the 100. These are some of the bigger sort of moving averages that a lot of traders will look at. 50, you times that by 2, you times it by 2 again, you're up to the 200-day moving average right there. Here's a pretty big crossover too. With all three of these lines, you've got the 50 period crossing above these levels. A longer term crossover would simply be the 100 above the 200. But what I wanted to highlight here is that 100, because that 100 can also represent longer term. On a longer term chart, what you'll see is when trends have come up and maybe after they have extended up for a while, don't be too surprised when you see this, but every once in a while you will have that pullback off the top. Once you've been around the markets for so long, you'll start to see that. I know Cam and I have seen that. Many of you have as well. You've been in the markets for a little bit, but if I just click here, drag this down, okay, around a 5%. That's all it really is. Now, you can see these 5% pullbacks after big rallies, and that's where that 100 could be so interesting, because you'll see pullbacks off that 5 when there's an upward trend. 5 to really 8% range is common. We're like 5.44, 5.5 range right now on this pullback, but there is our level right there. Now, a quick note, just to state that we are above that. I just wanted to show everybody, if I just draw a line through there off that prior low, you can see there is also some horizontal support. Now let's move on to our weekly chart. To highlight this for everyone, you can see we're looking at weekly moving averages here. I've got our 10, I've got our 40. Some will refer to this as the shorter term golden cross. I do use that on a weekly chart. We're looking at a 3-year weekly right now. There was our crossover. You can see that an initial sign might occur when you're just breaking down below that 10. There's your 40, quite a ways lower, kind of coming right at that prior high. Now, that could bolster support at that point, but this pullback right here is something to keep in mind. I'm going to do this because I wanted to have another sort of a posture indication here, but right now we are below that 10 weekly, which we've been holding very, very well. Now, one quick note, even if we look at prior moves over this 3-year time frame and looking at trends, folks, did we pull back below that 10? We did. We pulled back quite a bit. It looks actually very common too. Look at this. 1 bar below, recovery. Let's change some colors up. 1 bar below, and then a recovery right after that. You've got a bar below here, and you started to recover. You had a bar below here, you covered, you touched. Here we are. We're a bar below, but we're actually already kind of hammering out. The market's rejecting some of those lower points right now, and we've pushed back up to this point. So it is interesting. It is a shorter term move. If we're looking for a moving average, folks, that's going to hold kind of when the price dips and sort of gives us more indications that it might be bouncing at a support level, we just do a ×2 here on our 10, and we get a 20, okay? 20 period moving average. I actually sent this tweet out for you guys. I'll just pull it down right here so you can see it. But that is the 20 right there. I could put it on the chart, but there you go. Just might as well just go full screen so you can see it right there. But there you have it. Look how many times over a 15-year weekly time frame, when the S&P 500 is going higher and is showing strength, boy, we sure hit it a lot. This is a 20 again, so we just did a multiplier of that 10 by 2, another major one that's oftentimes used. I'm just going to highlight some of these touch points that you'll see through here and how many times we went above those. Right over here too. Now, this is going back into 2024, so much more recently. This guy on this week opened lower, but we immediately shot up to the top of that and went higher. So I will count it. I'll count this again, and maybe even right there. There's actually one through here as well. Folks, this trend has been so strong. This is the very first time we've actually pulled back to our 20. Now, it is an interesting gauge because, if you start to break below that 20 and then come up and maybe make a lower high, well, that's when prices can come back down. So be mindful of that. This is just kind of an idea of some of the things I will send out on the X platform, because we're not always it's not always that we're in a class where we can teach this stuff. So this kind of gives us that medium where we can just throw it out when we see it in sort of real time for you there. All right, so kind of curious if we'll get a bounce. I did put the NDX in there too for the NASDAQ because we're actually getting technically something very, very similar as well on that NASDAQ. Let's put it in NDX. There's your 10. We're clearly below the 10. I'm going to flip it just short term to show you what that 20 looks like. It's kind of outside of our posture a little bit, but there you go. Watch this. There it is. We touched right off it. And it too has a number of different touch points, but there is that SPX, a little bit bigger picture. We hit it right off the bottom there. And what's interesting about this, now we can zoom back in to our SPX as we just get a general perspective of where markets might be heading. Here's the big market here. There you go. Right at that lower kind of support level there is also where that 20 period moving average is coming in. When I say 20 period, I call it a 20 period or 20 bar because it is a weekly moving average that we're using there. Okay. So with that, that's what we've got on that front. Now, I wanted to take a look too, as we kind of narrow this down a little bit. Let's look at the NDX right here. Very, very similar breaking down. The difference here is we did make a little bit of a low. Now, the S&P 500 the NASDAQ had a lot of tech stocks that pushed it up higher. And it's always interesting to kind of see what has been moving. I should actually just show you this too. I didn't even think about doing it, but this is interesting to do. On a really challenging day in the market, take a look and see what stocks actually closed up on the day on the NASDAQ 100. That's how you can kind of see rotation because it is so tech heavy. What I kind of saw here was staples and healthcare. Okay. Some sort of retail as well in there. I mean, no, Costco, KHC, Kraft Heinz, as well as Ross Stores, but a lot of it was kind of healthcare and some others. But you can see, and this kind of gives us a sense of potential rotation in there that might unfold. So just keep that in mind. I want to take a look at that as we look at some other markets here, but just you guys have probably seen this ad nauseum, so I'm just going to kind of highlight that the Russell, though, is a little bit bigger pullback. Now, this is going to be below your 20-week moving average, clearly below your 50 and getting closer to your, the 200s down here. But this is kind of a longer term. Remember, these companies here do not have the balance sheets of the large or even the mid-cap stocks. And so when interest rates kind of solidify at higher levels, or there's kind of some challenges in the economy, these small caps, they get pushed around a little bit more, and sometimes they can lead the way. So just be mindful of that. All right, so a few more things as we looked kind of at the market posture. Next thing, though, is sector rotation grid. I want to pull this up real quick and just highlight this for you. That, as you know, we talked about this the past couple of weeks. Healthcare was one that had been showing strength relative to the market, even though the market over much of this time frame was in fact going higher. What was healthcare doing? Was it flashing signals on a potential rotation level? It was, because relatively speaking, because we are using relative strength, that is a relative strength line. Even though the markets were going up, healthcare was going up faster, and that's why this began to consolidate and go higher. And you can see that happening right there. Okay, right at that level. We'll look at healthcare in just a minute. In fact, I want to do this. There are some others just to highlight. Financials bounced, materials are bouncing. Okay, as markets are going down, these are going up. Tech down, discretionary down, industrials down, real estate. Where are you? There you are. Pull it down here. These guys will tend to drift on me over time. So I'm just going to go back, highlight this, pull it up. And there you go. Communication services also bounced as well with staples, and we saw staples moving. Healthcare clearly, though, the winner in the group. But we had seen this. This has been on our radar for the past several months, actually. And looking at, at least 3 months we've been looking at healthcare showing some strength. And here is actually just a visual of, let's see, sector grid. Yeah. The sector grid will just show us healthcare right over here. There you are. So what can you see if I go full screen on it? Some areas, well, I was looking at it earlier today. It was flagging right here, but look what happened. With that flag, we've seen a number of flags in here that have been following up. This is kind of a longer term one after we had our trend line break, but there could clearly be a bit of rotation going on. We'll just highlight that so it might stick in our memory banks a little bit longer, but there's the possibility of rotation here. I mean, you've actually maybe seen that already, but could it continue? Perhaps. And we might just be getting started with that. Now, that is the sector itself. There are other, obviously, companies within the sector that might be performing, maybe they haven't bounced yet. They might be laggards, and so maybe they don't have quite the move today, but they may be setting up, for example. Because this is all of the healthcare stocks within the S&P 500. Now, if I scoot over into our watch list, I do want to take another glance at our sectors. I want to give this guy a chance to load up. I realize I'm loading up all of them at the same time. I've got the different percentages in here, and this is really helpful too for also sector rotation, because one of the things we did see was that healthcare started to flash signs, just looking at percentages, one week, 1 month, 3 months, and 6 months. I might even add a 1 year in here down the road. It's going to take a little bit of time. What I'm going to do next time is I will load this up on a separate screen individually, so it will be ready for us. I might need to just do this right now, and you know what? We might just have to do it right now. So I just detached it, and I'll let it load up on a separate screen so we can take a look at it, because your guys' time is valuable, and I want to respect that time as this is loading. All right, so we'll give that a chance to load. And in the meantime, what we'll do is we'll do a little bit more market analysis just to kind of highlight this as we go through it. I wanted to start off, kind of plant a seed though with those sectors in the back of your mind. So because we're going to refer back to those in just a moment here. But if I go back in and take a look at our regular market and sector review, let's hit some of these core indicators that we'll look at each and every week as we go through this. Now, we're seeing right now on the S&P 500, looking at the NYSE, again, a bigger basket of stocks, and we reference the NYSE because the NYSE gives us breadth of the market. We get a sense of 2,700 stocks in the NYSE. Of course, you know, how many of those, the 500 are on the NYSE? I mean, some's going to be on the NASDAQ, I'm sure, but I mean, you know, you're getting between the NASDAQ and the NYSE, you're getting basically a lot of companies, a bigger basket of stocks. Now, taking a look at McClellan, it is interesting because we did dip below our minus 100, and this has been effective on this sort of time frame, going back, and you can look at a number of these. I'll highlight them real quick here for you. Nothing's guaranteed, but it has been working at sort of a market breadth guide. Here's your minus 100. We did dip below that on our McClellan oscillator. If you can break up above a minus 70, which we are doing today, McClellan will say you can anticipate a 2 to 3 week bounce, or it could just be a sideways move. It doesn't necessarily need to go higher, but it might bounce. Now think about this time of the year, November towards the end of the year. Sometimes you get the year-end rally. Some will call it the Santa Claus rally. I remember hearing Santa Claus rally. I'm not even kidding you. This is going to date me in the markets, but I remember it back in 1997. The Santa Claus rally. They were talking about it. So it's been around for a little bit, but that's just that historical read. And we'll look at seasonality here in just a second. But that is that tendency for the market to run to the end of the year. I did say tendency. It's not a guarantee. We'll see if that unfolds with this bounce. November's been a weaker month, but it traditionally is one of the strongest months of the year. But like I said, after a big rally, it's not too unusual to see a 5 to 8% pullback. Remember, this could also be associate itself with that 20 period, that's a 20-week moving average right at that level too. It remains to be seen, but it is very, very interesting heading into next week. All right, so the McClellan oscillator's there. I will say this, we did break down a little bit with our advanced decline line, but it is breaking back up. So that's kind of in line with stocks. I should say with the basket of the S&P 500 stocks, right? Collectively, the index, we're just kind of holding right there. So something to keep eyes on as well. Okay, let's speed it up through these a little bit, but let's see how we're doing on some of these other charts. That right there is your equal weight. Big bounce in the equal weight. I think that could easily contribute to the McClellan. This is our it's sort of a smaller view of market breadth. It's 500 as opposed to close to 3,000 stocks in the NYSE, but still interesting nonetheless. It's a big bounce. Now, could it fade? Sure. It has been previously, but I want to highlight this. On the SPX, folks, I'm adding in 2 additional letters, EW, that index. It equal weights everything. So we're not seeing the market weight. We're not seeing those big tech stocks, Mag 7, for example, Magnificent 7 stocks lead the way. This is everything equivalent. So it's another breadth read. Notice over here, we don't know where we'll close, about 40 minutes left in the day, but we did break above that low. We're holding it, and we're holding above these lows. All else equal, that's a positive, but we've got to see where we end on the day. You can see here too, support right there. So all else equal, that could still be setting up for that weekly bounce off of the 20-period moving average, if you want to think about it that way. All right, there it is, the Hindenburg-Omen indicator. And the Hindenburg-Omen, we hadn't seen it rear its head for a while, but as you can see over here on our weekly chart, when you start to trend lower and you get these spikes, it becomes even more interesting. But there can still be sort of a chasm in the market. That is a greater number of 52s. And what I mean by 52s, 52-week new highs and 52-week new lows. When you get a huge number of both, the market can fracture and it can break. That's why I spent some time on the SPXEW, because it's still showing that there could be some strength. McClellan showing some possible strength for the NYSE, the McClellan oscillators we just looked at. So those are positives, but I just bring that up because, yeah, over here, we got that Hindenburg omen where we're getting a large number of the 52-week new lows and the highs early. If you were to break that 20 and come up, and then you start to see the Hindenburgs really spike in here, that really can influence a downward trend just exactly like that. And what did we saw? We saw this really continue on for actually several more months at a faster pace as well. Okay. Now, just for fun, I want to do this because let's just see how our 20 period did over here as a reference point. You guys with me on that? Let's look at it right now. Let's just see, because I want to put this in place with the Hindenburg omen. And what we'll do is we'll just go ahead and ramp this up to a 5 so we can see it better. 20, 20, yeah, it's on a weekly chart. There it is. Okay, how did we do? We bounced off it a number of times here, but when you break it here and even come up and find resistance again, we're nowhere near that right now. But it's a good thing just to have on the radar. Just to have on the radar. Okay? Let's continue. All right. All right, and welcome to everybody who is just joining us now. To Riceberg's point, the Hindenburg omen is in fact stacking up. Yes, we'll see though. It depends on the trend because you can get that sort of fracturing, Riceberg and everybody, that will happen at interesting tops. Notice over here, it happened, and what was different here is we'd already broken that 20 and we just really sunk fast, and that was actually their 50% fib. That's why I kept that line on there. 50% from the high to low. It was actually a 61 in there as well, but just a little side note. Just a little bit more data. Okay, moving over to our NYSE, sticking with that larger basket. How are those new highs doing? Wow. Well, they're not doing great. In fact, they're sinking with price. In fact, even as prices right there in the NYA, right? That's the symbol, but referred to as the NYSE. What did we see with that? A downward trend of new highs. And we dipped. The fascinating thing is we made a low here. We kind of just are saying we're very close to being at the same flat level. So that's a positive. If you really start to dip here, that could be an issue. But like I said, right now, it could be a very interesting time for next week. Do we hold or not? You guys should see some signs on that, like higher closes could be an indication that traders would look for into next week, like right off the cuff, like Monday, Tuesday, Wednesday type thing. All right, there's your seasonality. Like I said, November tends to be strong, and it has been, wow, weak. But could we revert and go back higher towards the end of the year? That might be the question of a lot of different traders. Could we see something like this going forward into December where we continue to rally back up? That's the real big question. All right. 30-minute chart for a more minute view of what might be happening within the markets right here. Like we said, there is that 20-period moving average on a weekly basis that hit right here. So one indication on a short-term basis that could help us out, or I should say could help us out. Yeah, if the trend starts to develop here, higher highs and higher lows, we're just looking at 30 minutes, but sometimes traders that are examining interesting levels down here, like we just talked about on that possible weekly bounce, this can be some of the very first insights you could gain, let's say on a Monday morning, by looking at just a shorter term time frame on the chart. We've thrown these in here of interest as well. There's the equal weighted NASDAQ, not great. Other companies in the NASDAQ are really not holding up well. In fact, they're well below. That's our red line there. That is the NDXE, in case you're wondering. I got that from Sharon a long time ago, and there you go. So it's a little bit weaker there. Normally it will lead the way, but we're clearly down. So we have some real losers today in that group. All right, and lastly, where is our volume profile stand right now on this, for this particular screen? You can see over here, the volume profile here, we've got, look at these spikes. These are referred to as nodes. That is a volume profile spike. I was going to say kind of a, well, I was going to say top, but this represents the top 10% of volume. But notice over here that this is actually quite high, and that spike really represents, I'm going to draw a line right through it so you guys can see this. You're not going to see this anywhere else if you're not using volume profile, right there. Okay, that level. So what we're doing is we're taking this volume over here, all this volume, and we're saying, what prices did this volume come in at? And then we go ahead and just take all these prices on every given day, and we say, okay, it was at these different prices, and that's what you're seeing. Now we are using the E-mini futures contract here. The S&P E-mini contract is a guide here. There is an ETF for the S&P 500 as well that people could use, but we use futures in here. We hit those futures disclosures just to kind of highlight that, but it does give us volume. We don't get volume on the S&P 500. It's an index, right? You're not buying that underlying index. So there's very large correlations historically between the ES and the SPX, but this is our sort of intermediary guide that we're looking at. I'm going to show you this level where that support was at. And before I show you this up top, let me highlight this. Over here, when we were at this point, and this was huge volume through here, notice we hit it. We hit it. Let me just get some. We got very close here. We hit it very close there, all through there, and then we broke above, almost like an ascending triangle. It was fascinating to see that happen at the biggest volume. This is referred to as the value area, right? And this too would be a value area. In fact, if I'm just looking at the last 3 months, I'm telling you, that's where it's going to be, right there. Isn't that interesting? We've got to zoom on this right now to show you this. Look where that area comes in at, and you can see how important this is to breaking higher. Let's just draw that line right through here again. It's going to be something like this. I'll start off the bottoms, and there's your tops. But okay, so there's the biggest spike right there. It's going to be hard to do it otherwise. That's your biggest spike. See where we're at today? Folks, we are right there. So now do you have kind of an idea, maybe, with you, in the context of the volume profile, using the volume profile, where we might need to get above next week in order to maybe hold, I should say, bounce. You're going to get up higher here. If we're going to get up higher, I'm going to say something that's 100% true and logical. If you're going to get up into this range and continue on up, we absolutely have to get through this range first. And what's in our way? Well, there's a little bit more over here too. Let's just draw the tops of that right there. Oh, so this bar here as well. So you get a general sense. Now I'm going to clear everything off and just show you. This high supported by volume and this high. So really, your resistance range is right there. So if we're using volume profile this way, we're really actually looking for a trade to go through that level to get past this resistance. There's just a lot of buying and selling in here, and it can really keep prices stuck. Okay, so what is that level on an upper scale? I'm just going to give you the number right now too, so you can see it visually, but there it is. About 6,800. Okay, that's on the ES, but if I take it over to the SPX, you can see there's your 6,800. Very, very close. So maybe this high are right there, but this high and this high. Keep an eye on those, okay? Wow. It took this long, but it just barely loaded up. Remember this screen here of our rotation? Yeah, it loaded up maybe 5 minutes ago. It took a long time, so I'll have to load that up next time. All right, so by the way, that was the volume profile. I really wanted to emphasize the volume profile today. I think it's a key portion of our discussion because it can help us understand where we might be heading into next week. Where are those challenging levels? We had a couple of key ones there. You guys saw it right there. Be mindful of that volume profile, right? You're going to have to get through that heavy kind of buying activity. In other words, what does that do? It just helps to potentially solidify that support, or I should say at this point, we're below it, resistance at those levels. That's going to be resistance to that breakout. All right, now that we've got that under our belt, let's come back and look at the S&P 500 sectors. And what do we see here with the sectors? There's our 1 week, 1 month, 3, and 6. What's been moving and what's been moving for a while? Healthcare right there. Now, this started to really creep up back when we were looking at it about 3 months ago, right? This, as well as communication services, those two were showing strength. A big portion of that communication services, because we are looking at a market-weighted index here within the S&P 500, that's going to be Google. Okay, that's been playing a key role in that group. There's been some others as well, but that is there. Okay, so keep an eye on that. Now, you can see over here for this last 6 months, it's actually been quite strong too. But there's healthcare. What else has been creeping up? This is sort of fascinating right here. We've got over the 1 month time frame. Look at that. Energy. Energy. That's been showing some strength. Now, this week it's really been hit. But even with this hit, which is going to factor into your 1 month, right? This lowers the 1 month percentage because this 1 week is part of the 1 month that we're looking at. What you're getting here is basically the a pullback this week back towards a prior low, let's say on Fluid Light, the actual underlying energy contract itself. But be mindful of these. And what we're generally looking at here is, which of these are set to potentially go higher in the future. And this is what we've got. Now, the ones in green, the way that this indicator is set up, if they're outperforming the S&P 500, they'll be in green. This one doesn't have a minus sign in front of it. I've got to look and see what's going on there. It looks like everything else is working, but this does not have a minus sign. I don't think it's highlighted this way, but it didn't need to. Okay, I'm sorry. It was sitting below. It's acting correctly. But there you go. I just put it in order, which is a great way. I'm just clicking on the columns to see it. But when we see strength here, and by the way, although financials and industrials are down, they're green because they are outperforming the S&P 500. These guys are not outperforming the S&P 500. So still take note of the negative sign. It's still down on the week, at least thus far. Market's not closed, but they are outperforming the S&P 500. So a little bit more information within these columns as well. So be watching this. A quick note on rotation. If we start to see, now that we're looking at this each and every week here, this is in red. Healthcare over a 6 month time frame has not yet outperformed the S&P 500 price-wise. But 3 month, it's still positive and it's still growing. So obviously across the board, all positives. That could be an interesting area, as well as communication services. Now, what I wanted to do was kind of look at and see exactly what some of these stocks are in this group so that we can kind of highlight them right now for you. In fact, it's not too hard to look at these if we were to even just let's just do this. Let's look and just take a look at some of the strongest stocks in the strongest sectors for the entire week. Minimize this. To do that, we can go right into our scan tab. Real easy. Once you're in the scan tab, off to the right, scoot on down here and just go right into industry, and we'll pull up our industry right now. There's our healthcare right at the top. This is going to be everything. This is all of it. There's 60 companies in that healthcare sector. And once we have those columns down, all we got to do is pull it over here and we can find out exactly what was leading the way. This should load up a little bit faster here. And by the way, while we're waiting for that to load up, just can see here, Cam had posted in the chat that there is a survey link in the chat, folks. If you're finding this session helpful, whatever the case is, folks, there's only 2 questions on that survey. And I read those comments, so does my manager. I like the topic requests as well. They've been very informative and helpful. I'll read through each one of those. I appreciate it. If you're able to do it, if you can, it's just a short survey, 2 questions plus a comment section. If you're getting value from this presentation that we do, this webcast, Markets and Sectors, that we hold the last webcast on Fridays, smash that like button. It just lets me know, and it helps the YouTube algorithm to get that out so that it is useful, informative. Lets me know that anyhow. But be sure to also subscribe to our Trader Talk channel too. Okay. All right. So we've got over here. Let's go ahead and set this up and just see what has been performing the best this week. And what's really helpful too, I grabbed this sub industry. This tells me what industries within that healthcare sector I've really been making a key impact. And folks, you guys, what's cool is you guys have this right at your fingertips. The scan tab does more because you can isolate what we're after. And that healthcare is exactly what we were looking at when we pulled up the healthcare sector previously, right? It's the same companies that make that up. There they all are. Now you can look at these weekly and see what else is going on with them. If I have to say anything, I've got to say this. Biotech, leading the way there. Healthcare supplies, equipment. There you go. Bio and farm, equipment, supplies, equipment. You get the idea. We have all that before we get down to the facilities or life sciences. Okay, there's another one in Lilly right there. What the heck's going on with Merck though? MRK. There you go. Oh, I've still got my volume profile. You can have volume profiles on the stock itself just so you can see where they're at. But Merck, really, really big run over there. Regerion, I think it's REGN. Yeah, Regerion. There you go. So clearly helping healthcare go higher. Let me throw this out just your way because many of you do look at these. And so look at this. So you saw healthcare breaking out. I said maybe not everything's breaking out as strong. Let me go over here and I will just put us back to a company like Bristol Myers, kind of a laggard in the group, but yet they've been recently breaking a high. So not all of them have gone like this, right? And still a little bit of consolidation. So you might have still laggards within the group that just might not have already been priced in that could still be up there. Okay, this is a company to a lot of traders will look at these smaller price stocks. If you come over here with me, I'm just going to highlight this. Has a 5.3%, 5.36% dividend. There we go. Now, just a quick note on dividends. Dividends are not guaranteed to continue in the future. They can be cut at any time, but this is one I believe, don't quote me, I think it is a Dividend Aristocrat. They've been raising those for at least, let's see, 30 years or so. 25 years? Okay, forget it. They might have been raising it. Don't quote me on that, but for an extended period of time. You can always take a look at that by pulling out longer term time frames. Folks, if I wanted to look at the other areas that we're pulling up, real estate, discretionaries, etc., those different sectors, you can do that right there in the scan tab as well. Just simply go in here, go down to intersect with and industry. So I hope I've given you a fair amount of things to keep an eye on this week. You got a lot of great tools right at your fingertips. And yeah, you can really utilize a lot of this information to help you for going forward in terms of getting a sense of what might be going on next week. Where do we stand next week? And some ideas where there might be strength. You got those the sector. I'm going to put that sector grid as well for you in the description section down below under more for this class. But keep an eye on those things. Add in those volume profiles if you need to. Remember, that's just an indicator. Like all of our indicators, click on the little beaker icon, volume P right there. There's your volume profile. Got all this right here. All right, folks. Well, again, there was a survey link in the chat. If you're able to fill that out, that's great, folks. Smash the like button if you find this informative and helpful. It's been great being with you all week. It's been a turbulent week, but we did see a little bit of a bounce today. Still very volatile out there. So keep tabs on the market. Keep an eye on it. Last thing is I'll say is look right there on your VIX. VIX is at a level right now too where it has had a historical tendency to kind of hit some high levels and then sort of sell off. Moves inversely to the market. So we could see a market bounce in here if in fact that VIX tails off, which we've hit over the last 1 year 4 times. If it gets above that 30, we can be looking at some of our other indicators for potential market weakness. But on that note, you guys have a great weekend. Yeah, thank you as well. Hope you have a good rest of the day as well. Thank you, Cam, so much for your help in the chat. Everybody, I look forward to future discussions with you. Keep an eye on what we discussed so that you have that in place for next week. Catch you all next time, everybody. Bye bye.